GM. So the next FOMC is coming up on the 10th of December, the last opportunity for the Fed to make a decision on interest rates and monetary policy in 2025. And so far, they've done two rate cuts this year, September and October. So the last two meetings. Market reaction to that? Well, Bitcoin bearish, down from the September and October FOMC. NASDAQ, so US tech stocks, neutral slash indecisive. They pump from the September FOMC but dump from the October FOMC, so signals that chop is likely and indecision is there, so it's overall neutral. Gold, bullish reaction to September FOMC, bullish reaction to October FOMC. Dollar, bullish reaction to September FOMC, bullish reaction to October FOMC. So the risk off assets, the hedges, gold and the dollar have reacted bullishly to interest rate cuts this year. Stocks, they've reacted neutral. Bitcoin, however, very clear signal, has reacted bearishly. So that underperformance has to be noted. Bitcoin has massively outperformed in 2023, 2024 when you look at the comparative returns on the NASDAQ, gold, etc. But when it comes to 2025, it has now underperformed. And that's what you have to expect. Assets are now becoming mature. There's only so much liquidity in the markets rotating around. So rotations happen. And 2025 just hasn't been the year for Bitcoin. That doesn't mean you take the eye off the ball, but the signal is there. And that makes the December FOMC that much more interesting because news does not move markets. I know that might sound crazy. And yes, don't get me wrong, low time frame, there can be volatility and that can be catalyzed by news, but it's positioning. It's buying and selling, supply and demand that actually moves price. And news, when you use news correctly as a trader, simply is a tool to reveal positioning. So, December FOMC coming up. 87% probability right now of another interest rate cut. It's going to be very interesting to see. Do we see more of the same? So, does a December rate cut lead to lower on Bitcoin and a bearish reaction? And stock market, does it remain neutral? Gold, does it actually have a bullish reaction? Dollar, does it have a bullish reaction? Or do we see something different? And it's actually when you see something different that reveals the biggest signal when it comes to positioning. Because if Bitcoin actually starts to rally and have a change of character in reaction to the December FOMC, that means traders are overly positioned for another bearish reaction, expecting the pattern to continue. And that's when the crowd is wrong. And that's when you can see the other side of the bet actually play out and people get caught offside. That's how you get disbelief rallies, guys. So it's not whether the news is bullish or bearish. That does not matter as a professional trader. It's how price reacts to the news that reveals the positioning. Is it more of the same? So bearish continuation, trend is your friend, or do we actually get that divergence? That's going to be what I'm looking at carefully in the markets, because so far that's the current pattern when we're seeing these assets and interest rates. They've not been bullish for crypto. So let's see if that changes. In the build up to interest rates, looking at the ETF flows, they have started to actually dry up a little bit. Now the selling has stopped and that huge outflow day did mark the beginnings of what has been a local bottom, but haven't yet seen inflows to start backing the price action and seeing that reaccumulation. So something to note there. A little bit quiet on the institutional bid when it comes to Bitcoin right now in these high 80s. So let's take a look at Bitcoin. Obviously, it bounced off this accumulation zone so far, as expected. And currently, last week and this week's candle remain trading inside of the previous candle over here, starting 17th of November. So we've got so far 2 inside weeks. This is volatility compression. This is volatility getting reduced. That's good to see because we've had very high volatility. Now, as traders, we don't want to see that, but in terms of chances of price actually having some reaccumulation, it's these low volatility periods where you don't get too big of swings on Bitcoin that actually catalyze then the markups, because positioning gets built by smart money on the long side, and that then leads to price marking up when it's ready and the volatility expands. You can see over here, volatility gets crushed, crushed, crushed. So going to be interesting to see which side this breaks. Of course, that can also lead to markdowns if it is distribution that wins overall. So you do have this range here where we're now trading inside the week of 80k to 96k. That's going to lead to liquidity building up on either side, which can then catalyze a move either way. So interesting to see how this volatility builds. When we zoom in now to the daily, this paints a better picture, because you're seeing the 12 and 21 EMA bands, they're rejecting as resistance every time. And on the recent tap, rejected as resistance, as I mentioned. It was the worst area to take trades over here, because you were at the point where Bitcoin is going sideways, bands are flattening out, and you could continue rallying, but also you could reject, since it's rejected multiple times before. So in both scenarios, this is what Bitcoin would have looked like if it was going to continue, or if it was going to actually reverse like it has done. That's why I said patience is the best play. And we had that end of month phenomenon where you see buying going into the end of the month. As retail traders, they generally get paid, they DCA, smart money bid the price up for that exit liquidity that's guaranteed, and then they dump the price down, because when there's guaranteed exit liquidity coming in on a known date, last working day of the month, why not mark the price up before and then sell into all of that retail buying? And that's what you saw on this early month dip. So let's take a look at it. Lower time frames here. Got the 100-week EMA, which we know has been interesting. You've got this big 4-hour gap over here, which is that monthly open dump, as you can see. So we lost the 100-week EMA, reclaimed it on this candle. So that's led to a short-term bounce. And as I said in the Discord, that's very expected to see after a reclaim. Some sort of rally here, since the selling did get exhausted yesterday. And yesterday, we took some great moves off that New York Open. So this was the play. We got this box off the New York Open. We then lost the New York Open, took 50% profits at that low for the day, ended up exiting the remaining 50% at break even. So that was a clear sign in itself that markets are potentially getting exhausted in the low time frame, because the bearish setup couldn't continue lower, and that's why we're now seeing this rally. So when it comes to Bitcoin, having H4 closes in this gap, I do think in the short term, this can continue higher, and we can actually fill in maybe half of this monthly open gap before rejecting, if not potentially even the full gap, and we reject off that monthly open, where I'm going to be most interested in potentially taking some short setups over there, because I don't think we're most likely to actually just flip this level and continue on. I'd actually much rather see a proper retest of the 80s and potentially this liquidity, as I've been mentioning for some weeks now, one of the trade of the weeks from the weekly outlook video. I do think this general area is going to be a much better area in terms of risk to reward for longs, whether it's a high or low, or whether we do get that liquidity sweep and then bounce, as opposed to just this monthly open dump and reclaim on the Tuesday, because this was very heavy selling off December. We are coming into the end of the year now, which has, as I said, been a failure in terms of 4-year cycle believers for Bitcoin. So there's less of a reason to have that bullish bid going into the end of December. And I think, therefore, when it comes to longs, you want to wait for those high probability setups where you take known liquidity. It's likely to have a big reaction because you take that known liquidity. You enter back in that forced selling zone over here, as I mentioned on Friday. That's where you get your better setups, rather than this, which is almost in the middle of the range here. Yes, I think, again, we can rally up to this gap and fill in the gap, but most likely rejects there. And the invalidation to that is simple. If you start closing 4 hours candles above the monthly open, then this 93k liquidity becomes the obvious target for me over here. That would be showcasing that bulls are actually in control, and potentially what I said there is wrong, and there is enough demand here off that high 83s retest over here. And maybe that does then catalyze a move at least to this liquidity, if not higher. So signal for that, confirmation for that, would be a close above the monthly open, which we've, of course, dumped from. Failing to close above the monthly open, then I'd just expect a rejection for, again, that bottoming formation, whether it's a sweep or whether it is that higher low scenario. And it's really just been exercising patience, as you guys will know. I've been only scalping quick shorts, quick longs within this low volatility range on Bitcoin. You want to wait for volatility to expand, as I mentioned, not see inside candles when looking for swing longs, those multi-day, multi-week holds, because liquidity is building on either side, and eventually liquidity does get taken, especially in crypto. That's always the game, to hunt the stops, to then produce the best reactions, rather than diddling in the middle where we know we have the least edge, because that's when volatility is getting crushed. And volatility eventually expands. It's just a matter of time, and maybe it expands to 93, as I said, by closing above the monthly open here, or maybe we reject and we actually get the expansion lower to retest the low 80s over here. So that's what I'll be looking at in terms of BTC. Expecting short-term continuation here, but wary of rejections and not a high place of good risk to reward in terms of swing setups. You could scalp intraday for sure, as we have been, but patience remains the best play in terms of multi-day, multi-week positioning. So when we go to the lower time frames on Bitcoin, I took this volume profile of this previous consolidation over here, which we then marked down from. And as soon as we reclaim that value area low, so this is the 70% volume distribution, all the buying and selling, majority of the buying and selling of this consolidation, as soon as we reclaimed it on this candle here, led to a move to the other side of the range, the value area high. Very simple. A system that I teach in auction market theory. And when we got to the value area high, that's where we were rejecting. But the key difference is the rejections found support at the daily open today, which also is the New York Open from Monday. It's clustered around this same level, around 86.2K. So all of the tests, all of the rejections just came back and tested the support at the daily open, New York Open of Monday. And that's been our platform for this rally so far. Bears are unable to get price below this daily open, New York Open. Can really remove the New York Open and just use the daily open now. Below there is where bears get control again. But since we're above there and finding support there, bulls are in control and breaking above the value area high now for the third time. You'd expect continuation high here. And to support that, you want to see on any dumps the value area high to actually now hold on a retest. That would show strength in this potential uptrend over here if you do see that hold. And as I said, the invalidation for that uptrend is losing the daily open. Lose the daily open, then you likely head back to this value area low over here and you're back to balance. Because right now, markets within the value area high and value area low, they are in balance. This is where markets want to be. Then when they get outside, they go into imbalance. That's when you see your mark down. And then when you go back in the range, back to balance, you get that low volatility. And then you can see it's trying to break out, fails initially, but then trying to break out again. This is where you can potentially go into imbalance. And imbalance, in other words, is when you trend. Balance is when you mean revert and range. So that's what you're looking for. If you fall back below the value area high, then you risk going back into balance, and especially below that daily open, then likely to go to the value area low again. And that's where it remains to be seen if we close below, leads to markdown, or whether we hold it as support. But for now, longs seem to be in control, especially with, as I said, that 4-hour close within this gap here. Could see this monthly open dump fill, and you get the classic Monday trap, Tuesday reversal. And that will be seen strong uptrend by holding the value area high and invalidation, not losing the daily open. So that's what I'll be looking at in terms of Bitcoin today. And when we look at the data, take a little dive into this, what we can see is perp CVD, spot CVD, both rising. So price respecting the bid on both perps and both spot. Open interest has been declining though. So a lot of this is just shorts closing out, leading to this rally rather than actual demand and rebuilding of positions, which is again why I'm a little bit more wary and why I'm not so interested in diddling too much in the middle over here. Again, took some scalp shorts, took some scalps, that's fine. But for swing longs, I think the better opportunity is going to be in this demand zone, which was where price stopped. It's where price couldn't go lower. So there clearly was a bid here, and now you just need to see the retest of this area to confirm if there really is demand there or if we actually break through and just continue the markdown. So that's what I'd be looking at in terms of Bitcoin. Got, of course, the all important FOMC coming up next week. So could see some decent moves this week as we head into that. You'd expect the closer we get to FOMC, the more volatility drops. So I do think Tuesday, Wednesday, Thursday should be the opportunity for a decent move if we are going to get one early December. Otherwise, again, you can see that volatility drop off and price go into that compression and nothingness. So that's what I'm looking at in terms of trade setups this week, and just taking a look at the wider market. So we look at gold, mentioned on the weekly outlook to watch carefully whether we actually reject this liquidity level here, which we so far are. That should lead to upside on Bitcoin. That's exactly what I said. And if we close above this level, which would look like something like this, now getting back above it and then pushing up, that's going to lead to bearishness on Bitcoin, as we know with the Bitcoin gold correlations in the short term. So I'll be watching this liquidity carefully. If we actually now continue lower, complete this false breakout, this bearish setup, should lead to Bitcoin actually having probably a move to the monthly open would be the equivalent. Alternatively, if we start breaking above, invalidating the bearish setup, then that's a bullish setup, and that can lead to downside on Bitcoin. And then you're looking at the all-time high here on gold as the next point, whether do we reject here, it's going to lead to relief on Bitcoin, or do we actually break and hold, which is going to lead to bearishness on Bitcoin. But as you guys will know, silver is actually the one breaking out that I talked about on Sunday night. So this is where you're seeing the beta going on in terms of commodities. People are clearly rotating out of gold into the higher risk assets, higher returning in terms of risk to reward at this stage assets, which is silver, which is clearly marking up out of its consolidation while gold remains in it. So you're seeing rotations into that risk curve, which shows you're potentially getting later and later into the commodity cycle right now, which is interesting and probably suggests that gold is less likely to break out, even if gold hits all-time highs and does get back above this first liquidity, which is rejecting that. It's probably likely to actually just reject at the all-time highs and again form what could be one big distribution or one big reaccumulation for higher. And that's going to, of course, be very important as to what happens on Bitcoin due to those correlations in the short term. When gold rises short term, Bitcoin stalls out or bleeds. And when gold falls in the short term, Bitcoin tends to rally. Bitcoin acts as that higher beta asset almost to gold. And the rotations go into Bitcoin after gold has had its rally and mark up, which makes sense as gold is the bigger asset to Bitcoin. Bitcoin is seen as digital gold, so it's almost the same way ETH is to Bitcoin. You see that rotation into the riskier asset after the bigger asset has made its move and direction. So I'll be looking at in terms of gold, looking at the stock market. Again, you're just seeing price consolidate, holding these weekly 12 and 21 EMA bands. So it's in this box over here. Volatility is definitely compressing as we head towards the end of the year. It's been a bullish year for the stock market, much more bullish than Bitcoin. See a very big green candle after that tariff flush, whereas Bitcoin is actually red for the year. So interesting to see now how this box shakes up. Do we actually break to the upside and continue marking up, or does this end up being a distribution? I think that's going to be telling in the coming weeks as to market directions. And of course, that December FOMC is going to be very indicative of how all of the markets are reacting to new monetary policy and how that can set up ourselves for 2026. So be watching what direction this box breaks in terms of the stock market to dictate whether this is going to be a risk on or risk off move in terms of stocks. And of course, you've got AI. That's what moving all of these stocks right now. Nvidia does look toppy over here with that big exhaustion move. Main confirmation for Nvidia to top out would be a break below 167. So that's the swing low on the weekly over here. Break below that would be a market structure break. So that's what I'll be looking at on Nvidia to confirm that, yes, this is a highly likely top. And when it comes to other stocks like Palantir, this is another big mover in terms of AI. this is actually shaping up more in terms of a box. So again, you have this exhaustion over here. I believe it was just before the Nvidia earnings. So when you had a bunch of news around all of these companies creating deals with each other, that got sold into, and now you're just consolidating, and it's yet to be seen what way does this consolidation break. Does it break to the downside after all is said and done, or the upside? Is it accumulation or distribution? That's going to be the big tell to see whether we're risk on or risk off in the stock market, because as I said, there is a lot of indecision you can see right now, even in terms of just rate cuts, where bullish reaction to September rate cut, bearish reaction to October rate cut, while the risk off assets are bullish. So what way does that shake out? And the question really is, how much is AI going to be able to prop up the stock market? How much more investment is there to go? How undercrowded really is that trade? And how much more is there to price in terms of bullishness, at least in the short term in this cycle, if you want to call it that? But right now, Bitcoin, clearly it is weak, underperforming in terms of rate cuts. It's not got that AI investment. But again, that's when I start looking for opportunity, when Bitcoin starts underperforming, as opposed to the opposite. Because if you believe in Bitcoin long term, you want to accumulate hard assets that are limited in supply. You believe governments are always going to continue inflating the debt, inflating your currency, devaluing your worth constantly, making the average person poorer, then Bitcoin is the only answer. It is the only freedom for me. When it comes to the stock market, it almost only tracks inflation. You almost don't even make any gains, because S&P does what? 9-10% average per year. And if inflation's 8-9-10% average per year, you're not actually making money. You're just staying neutral. Whereas Bitcoin actually outperforms, we see year on year, or at least it has done for the last decade plus. And I'm betting on that to continue. So underperformance doesn't bother me. Got to be realistic, got to identify it and not hide away from it. But overall, it's a long-term player's game, here to accumulate assets and cheap Bitcoin. I'm all here for it, because bullish days, bullish months, bullish years will return. I'm sure of that. Macro assets, they just have their cycles of rotation. Only so much liquidity, as I said at the beginning of the video. And eventually, the liquidity gets too focused on the stock market or gold or the dollar. People get too euphoric, and it rotates back to the asset that was in that depression. Everything is just a cycle of emotions, rotations. That's just how it works. And that's why you don't get bearish on the underperformance on an asset that you are bullish on long term. It's actually an opportunity. So patience is the name of the game this year, as we look to now 2026 with new trading plans, new ideas. Going to be exciting. Hope you're all with me along the way. If you enjoyed this video, drop a like, drop a comment. Let me know what you thought. Drop a subscribe. You want to join the school? Drop me a message on Telegram. I'll see you guys in the next one. GM.